Welcome to the Opening Bell Report.
$500.
Mm-hmm.
Well, actually, to be precise, $501.29 at the close.
Right.
And I was just watching the ticker after hours, and it kept climbing.
Yeah.
It didn't want to stop.
It's a significant psychological barrier to break, absolutely.
Significant. I mean, it feels historic.
Yeah.
We're talking about SanDisk, ticker SNDK, officially smashing through that $500 barrier.
Yay.
That is a 10% jump in a single day. And I have to be honest with you. When I saw the analysis report this morning and I saw that little rocket emoji in the title, I usually roll my eyes at that stuff. It feels a bit, hypey.
Usually I'd agree. It often signals more hype than substance. But in this case, the rocket emoji might actually be an understatement.
Okay, that's a bold claim because we aren't talking about some obscure crypto coin here. This is hardware. This is storage. This is SanDisk. So the mission for this deep dive is pretty clear. I want to understand how on earth a company that was trading at, what was it, $27 a year ago?
Around that, yeah.
How does that become the darling of the market?
It is the question of the moment. And you're right. This isn't just a stock price going up. It's about understanding the why.
Okay.
We need to unpack the 3 specific catalysts for today's surge. But, more importantly, we have to look at the structural shift, how a so-called legacy business became what analysts are now calling the primary beneficiary of the AI boom.
It sounds like revenge of the hardware.
In a way, it is. We're going to connect the dots between some very specific comments at CES, some leaked supply chain reports that are frankly astonishing, and the brutal mechanics of a short squeeze.
Okay, let's do it. But before we get to today's madness, I think we need to set the baseline.
Good idea.
Because to appreciate $500, you have to appreciate how low the bar was set. So take us back to February 2025.
February 2025, yeah. In market terms, that feels like a decade ago. SanDisk had just completed its spinoff from Western Digital, WDC.
Right.
And usually a spinoff is a chance to unlock value, but in this case, the market reaction was just silence.
Crickets.
Worse than crickets. It was dismissal. The stock was trading around, $27.90? The narrative on Wall Street was that SanDisk was a legacy business, a dinosaur.
I remember that. The perception was they dealt in commodities, memory cards, thumb drives.
Things you buy at the checkout counter.
Exactly. And, crucially, hard disk drives. Or as the industry calls it, spinning rust.
Spinning rust.
That is such a harsh term. For anyone who hasn't built a PC recently, explain why that's so dismissive.
Well, it's descriptive, but it implies it's obsolete. Traditional hard drives, HDDs, use physical magnetic platters that spin around.
Like a low record player.
Exactly like a record player. They're great for cold storage, for archiving, because they're cheap. But investors looked at SanDisk and saw a company tied to this old mechanical tech. They didn't see growth. They saw a value trap.
So everyone's thinking, okay, boring utility player, yesterday's news. What changed? What was the pivot point where the market realized it had the whole thesis wrong?
The pivot wasn't a Super Bowl ad or some marketing gimmick. It was a realization by the market that you can't run a Ferrari on low-grade fuel.
I like that analogy.
Yeah.
So what's the Ferrari here?
The Ferrari is the massive AI clusters being built by Google, Microsoft, Meta.
The hyperscalers.
Right. They're deploying NVIDIA H100 and H200 chips. These are the brains of AI. $40,000 chips.
Billions of dollars in silicon sitting in these data centers.
And here's the physics problem, the memory wall. A brain is useless if it can't access memory fast enough. If you try to feed an H200 chip with spitting rust, the chip just sits there, idle.
Waiting
milliseconds for a mechanical arm to find the data. And when you have billions of dollars of chips sitting idle,
you're just lighting money on fire.
You are torching capital. The market suddenly realized that flash storage, the high-performance enterprise SSDs that SanDisk specializes in, is the only thing fast enough to keep up.
So it wasn't that SanDisk reinvented itself. It was that the world suddenly needed exactly what they were already making.
At a scale nobody predicted. It's a classic supply-demand mismatch. And the numbers, they just reflect that violence. We're talking a one-year return of, what, 1,600%?
1,600%. That is just absurd. For a hardware company, that's unheard of.
And just in the first 3 weeks of this year, January 2026, the stock was already up about 90%. Before today.
Which brings us to the main event, because even up 90%, a 10% single-day pop is huge. So you mentioned 3 catalysts. Why today?
It was a perfect storm. News, validation, and market mechanics. Let's start with Catalyst A, the NVIDIA effect.
It always comes back to NVIDIA, doesn't it?
They're the sun in this solar system. We're still feeling the aftershocks from CES 2026. NVIDIA's CEO, Jensen Huang, he talked about a completely unserved market for AI storage.
He basically said compute is solved, but storage is the new bottleneck.
He put a giant help wanted sign up for high-speed storage. And today, Citi, the bank, they answered that ad. They put out a research note explicitly naming SanDisk as the primary beneficiary of this bottleneck. And they raised their price target from $280 to $490.
Whoa. They almost doubled it. Usually analysts nudge it up like 5%.
This was a catch-up upgrade. They knew they were behind the curve. And was wild as the stock smashed right through that 490 target immediately. It closed at 501.
So the market is saying, thanks, Citi, but you're still too conservative.
You're still looking in the rearview mirror. Exactly.
That is wild. Okay, so that's catalyst A. What about B? You mentioned pricing power. This sounds like the aha moment.
This is maybe the most important piece of news, the part that justifies the valuation. Leaked supply chain reports this morning about their enterprise SSDs.
The high-end stuff. What did they say?
They said SanDisk negotiated a 50% price hike for Q2 delivery.
50.
A flat 50% increase in 1 quarter.
Hold on, let's just pause on that. If I told my biggest clients their bill was going up 50% tomorrow, I'd be fired.
Right, but that's the key insight. Who are the clients?
The hyperscalers. Big tech.
And the report says they accepted the hikes without pushback.
No pushback at all.
They just wrote the check. This proves demand for this specific storage is inelastic.
Inelastic. Break that down. Why is that word so important?
It means demand doesn't drop when the price shoots up. It's like selling water in a desert. If you're Google and you have billions in NVIDIA chips sitting there waiting.
We can't afford to wait.
You can't. The cost of storage is a rounding error compared to the cost of an idle GPU cluster. If SanDisk says the price is up 50%, you pay it.
That is an incredibly powerful position to be in.
It is. It transforms them from a commodity vendor to a strategic partner holding all the cards, which leads directly to the third factor, catalyst C.
The market mechanics. You mentioned a short squeeze.
Yeah, so think about it. The stock was already up 90% this month.
It had almost doubled in 3 weeks.
So a lot of traders, the bears, they saw that and thought, this is a bubble. It has to pull back. So they started shorting the stock.
Betting it would go down.
Exactly. They borrow shares and sell them, planning to buy them back cheaper. But then today's news hits, the stock doesn't drop. It blows past 450. And that forces a capitulation.
They have to give up.
Worse, to close their short position, they have to buy the stock.
Oh.
So as the price was rising, they were forced to buy, which just added more fuel to the fire, pushing it even higher. It's a vicious feedback loop.
So the people betting against the company actually became the biggest buyers today.
Ironically, yes. The skeptics funded the rocket launch.
That is brutal. Okay, so we've got the catalyst, but let's look under the hood. Is the company actually making money? Because you showed me this then versus now table, and the difference is stark.
It's night and day. And this is why it isn't just speculation. Look at gross margin.
That's basically profit on each unit they sell, right?
Roughly, yeah. After the spinoff, their gross margin was around 18%.
18. Okay. Not great.
Oh, it's a commodity business. You're fighting for pennies. But today, the report shows gross margin at 47.7%.
Almost 48%. That's almost software level margins for hardware.
It's exceptionally high, and it proved what we just talked about. They have pricing power, and that flows straight to the bottom line because of operating leverage.
Operating leverage. Finance people love that term. What does it actually mean?
Imagine you own a factory. Your rent, your R&D, those are fixed costs.
They're the same no matter what.
Right. SanDisk's fixed costs haven't changed much, but now they're selling their product for 50% more. Almost every dollar of that price hike drops straight to the bottom line as pure profit.
So profit grows way faster than revenue.
Way faster. Back in 2025, they were losing money. Today, $488 million in net income, from a loss to nearly $500 million in profit.
Wow.
That's operating leverage. So the market has completely re-rated the company. It's not a hardware stock anymore.
So what are they calling it?
An AI utility, or AI infrastructure.
Like an electric company.
In the sense that it's essential, foundational. If you want to build AI, you have to pay the toll to SanDisk.
That makes sense.
Yeah.
But here's the question everyone listening is asking. $501. Is it too late? Is this the top?
The $500 question, right? There's a fierce debate. Let's start with the bull case.
The optimist's view. Why does it go higher?
The bulls are targeting 600, maybe more. Their argument is that the SSD shortage is structural.
Meaning it's not a quick fix.
Right. Building a new factory, a fab, takes years and billions of dollars. You can't just flip a switch. So this shortage and the pricing power will likely last until 2027.
But for the next couple of years, they're just printing money.
That's the argument. And interestingly, if you look at its PE ratio, its valuation, it's still cheaper than NVIDIA or AMD. So relative to its peers, it's still a deal.
Okay, that's the bull case. Now play devil's advocate. What's the bear case?
The bears are calling for a pullback to around 400. Their main point is technical. The stock is overextended.
Meaning?
There's a metric called the RSI, Relative Strength Index. It's over 78. Anything over 70 is considered overbought. It usually signals the buying frenzy went too far, too fast.
So it just needs to take a breath.
A cooling off period is statistically likely, yeah. The other warning is that at $500, the valuation now assumes perfection.
Perfect execution.
Exactly. Any slip up in production or, and this is the big one, if the hyperscalers slow down their spending.
If they cut their AI budgets.
SanDisk gets hit first. The bears worry people are forgetting the bust part of the boom and bust cycle.
It's priced for perfection. That's always a scary spot.
It is.
Okay, so to recap, a 10% day driven by NVIDIA aftershocks, massive price hikes that big tech has to pay, and short sellers fueling the fire. A fundamental shift from boring hard drive company to critical AI infrastructure.
That sums it up perfectly. It's a repricing event.
It really validates the whole AI storage cycle thesis, doesn't it?
It does. We spent 2 years obsessed with the chips, the compute, the H100. We all know it, but we totally ignored storage.
Forgot the data has to live somewhere.
And it has to move fast. As long as AI capital expenditure keeps growing, this trend stays intact.
It's fascinating. You know, we always look for the next shiny thing. Sometimes the biggest opportunity is sitting right there in the legacy bin.
It raises an important question. We were so focused on the AI chips, the brains, that we ignored the memory. But if data is the new oil,
right,
then companies like SanDisk just became the owners of the pipelines.
I love that. You can't move the oil without the pipeline.
So my provocative thought to leave you with is this. The market is efficient. It eventually finds the bottleneck. It found compute. Now it has found storage. What's next?
The next bottleneck.
Exactly. What other boring hardware sector is everyone ignoring right now that's essential for AI? We've done compute and storage. What about cooling? What about power distribution? What about the actual physical cables connecting everything?
The cables. I bet there's some boring cable company out there about to go on a 1,600% run.
It's entirely possible. The infrastructure is vast. The smart money isn't chasing SanDisk at 500. They're already looking for the next piece of essential plumbing that everyone else is ignoring.
Well, you heard the expert. Stop looking at the shiny stuff and start looking at the plumbing. Thanks for diving in with us today.
A pleasure, as always.
Don't forget to like, share, and subscribe for more.